Good morning. Happy Saturday, friends. So I thought it would be a nice opportunity to do another weekly roundup so that we can talk about the trades that we have taken or that we have entered, closed, so on and so forth for the week. Okay. All right. So this week we've opened a number of trades, but we didn't close that many discretionary trades this week, and we didn't open any new short puts. So those we won't necessarily need to go over. The main trades that we have taken this week, besides the trades that we have opened, are mostly consistent of the settlement butterflies and the the two different kinds of settlement butterflies. So the overnight settlement butterfly, which we call the narrow iron butterfly, and the long butterfly, which is same day expiration, and then of course the midday and the 130 iron butterfly. Now this week, the settlement butterflies have all performed perfectly. Those have all at some point in the first half of the day before midday. Um, Price went back to settlement and we were able to close those for a profit. And you can review these trades. These are of course, the end of day trades that we've been able to participate in if you use the end of day. Otherwise, you should have been closing them earlier on, which you can see like the put broken wing butterfly, the call spread, some of the other long butterflies, call broken wing butterfly, put broken wing butterfly. Those are all the settlement butterflies that we've participated in. You can also look at the time created. Anything that is created between 3:30 and 4 p.m. my time in Montenegro, then you know that that's the settlement butterfly, and then you can see the timestamp for the others. 6 p.m. Montenegrin time is the midday iron butterfly, and 7:30 p.m. is the 1:30 iron butterfly. So you can see that those have all closed profitably, except for the Monday iron butterfly, that if you did not manage it at all, would have closed for a loss. Now, when we closed the trade, when I signaled to close the trade, it did close at $3.20. Oddly, that's also what Friday's closed as. So we had those two trades that we had to close. But on Monday, we managed the trade. So on Monday, we actually closed the 130 iron butterfly for $3.80. So we actually achieved a higher profit in the 130 iron butterfly than the loss on the midday if you closed it on the signaling. But for those that rolled out the call credit spread, as I had suggested, then you can see here that that trade actually achieved a $1,300 return. So overall, even if you would have taken a higher loss than the $3.20 on closure when I signaled, you still would have um, significantly outperformed by utilizing the trade management that I posted. And the reason that this works, and I think this is a really important conversation to have, because this is actually something that often, when we're talking about iron butterflies, that people forget. I always tell you guys that every multi-leg option strategy is built up of multiple pieces. And if when you're taking the trade, you can visualize what those pieces are trying to accomplish or trying to achieve, then doing the management becomes obviously much easier. So let's actually just create an over weekend iron butterfly really fast. Um, and this is obviously not balanced. Let's balance it out. So normally we're creating something like this. This is not a perfect example, but what you want to pay attention to is that you actually have two credit spreads. You have the put credit spread and the call credit spread. And when price moves significantly in one direction, so let's say, for instance, that the price moves all the way up, your put credit spread is going to decay to nothing. And obviously, when you took in your credit, half of the credit was for this downside piece, and the other half of the credit you took in because you have sold to open this upside piece. And so essentially, when price moves significantly in one direction, like if in our example, most of the days the price had moved significantly up, this put side decays to zero. So what you want to do is you want to close out the put side because now it's not doing anything for you. It has no value. But what has happened is that now your call credit spread is now completely in the money. So this call credit spread, when we're selling it now, it's worth maybe about half of the value of this trade. So let's just say that when we initially opened it, the call credit spread was worth $1,000 and the put credit spread was worth $1,000. But now, because the price has moved totally up inside that call credit spread is going to actually be worth a whole lot more. So we can actually just demonstrate this by removing the put credit spread. So or excluding it. So right now we can see that the call credit spread by itself is worth $1,300. But now, if the price has moved all the way up and has moved above that call credit spread, then what happens? So let's just move this down, and just to make the example clearer, when your call credit spread is totally in the money, now all of a sudden your call credit spread is worth $19, right? So it's obviously worth a much larger amount of credit. So when you are deep in the money on one side and you roll out the credit spread, what it allows you to do is take in a new significant credit, and you do pay to make this change, right? So the broker is essentially allowing you to pay to roll out because you're buying an extra day. That's what you're paying for. You're paying for an extra day of time for the price to do what it's going to do, except for the fact that that new credit spread that you have is actually worth a lot more. So now all you need is for price to come down towards your short leg. So just come a little bit out the money so that your call credit spread now is no longer in the money, but moves out the money. And then this entire structure will start to decay. And that's what we saw. So basically on Monday, our call credit spread was totally in the money. But because of the way the price action had popped out, we we were quite convinced that that just didn't seem like a reasonable price action. And you can see on my notes, this is Friday. Let me erase that random box. Let's see. This is Friday. So here you can see on Monday that, we randomly got this like massive squeeze up. And usually with price action, if you have a significant, very fast move away from the volume weighted average, the VWAP, and you just have this like really directional, strong move, very often the price action is going to want to go back and clear up that price action. You can see this kind of what I call my trend line activity. It didn't just happen. It also happened at the very beginning of the day where we got this strong move. We created like a bull flag and then we popped up. Then we just started rounding. And literally the very next day, we gave back all of that price action, which to be honest was not very surprising because this kind of price activity is not what the market really likes. The market likes to have a lot more chopping action where you're kind of moving around in all of the price points. So you're picking up all the buyers and sellers. Price doesn't like to leave people behind. So the very next day, price just dumped all the way through us. Now, of course, we knew that in September you have bearishness, so chances were on our side. We would get more bearishness instead of more strength. And so just overall, we had a lot of reasons to believe that this situation was going to work out. But we also know that in the last 2 or 3 weeks, the price has done a lot more digesting around the 130 price point than the midday price point. And that's also what I signaled on Friday. that you want to lean into these two trades now in an equal fashion. Where before, I know for a long time, a lot of people like to use the midday iron butterfly as their sole trade. And on the days that it works, that's totally fine. But on the days where you don't get out efficiently, then you do want to be prepared with enough dry powder to be able to take advantage of the 130 price action. Because as we saw on Friday and on Monday, and we saw on Friday that there was an opportunity to exit the trade. So here you see literally the same price action we saw on Friday, where you got one strong move up and then you got a lot of digestion around the top. So we got a bit of a pullback, which allowed us on the Friday. If you did not want to do any trade management, you could have gotten out on this trade with a $3.20 loss. But then the 130 iron butterfly closed at, we can actually just look at the list so that I don't, because I'm certain I do not remember. So let's see, where are you? 7:30. Okay, closed at $3.80. And then Friday's 130 Iron Butterfly closed at $6.90. But I did indicate to you guys when it was worth $3.70 that it was a decent time to close because of the fact that we had taken that $3.80 loss earlier in the day. So that all that to say, you can see the returns on our settlement butterflies. And those also, you have to remember, guys, because of the fact that we have so many trades on SPX, it's often very difficult for me to signal closures on every single thing, like at the best price action. So I always tell people, have your stop losses in, or once you're in profit, add a stop loss that's above the break-even price so that you know that if you have to go on about your day and you can't watch your charts, that you're going to be able to get out of the trade green, because that's the most important thing, right? Because with the settlement butterflies, what I keep telling you is that the key is that there is not a pattern of when settlement is tapped, though there is a significant number of times that settlement is tapped um, earlier on in the day, because you often get that overnight gap fill up or down, whatever, like around the early establishment of the day. But if you get a bit of a gap and go, it doesn't necessarily mean that the gap is not going to get filled, because as we know, the market just does not like to leave price gaps behind, even in the US trading hours. So even though obviously in the overnight there could have been a lot of price action digesting in that area, the US markets likes to cover all of the price activity up and down the chain. So you do have to sometimes be a little bit patient, but if your settlement gets tapped earlier in the day, even if it hasn't achieved the profit target that like you wish for, you might want to consider taking profits off the table, because as we know, once that gap gets filled, and we can look at this week, just so that we're not talking out of our backside, but we can see that here, this is the Friday to Monday gap down. We digest, we are doing a lot here, and our settlement butterflies around all of this time were quite significantly green. On the pullback, they were still green. But then on this second leg up, and now we're above the VWAP. We've filled the gap. Like there's nothing to tell us that we're not going to keep being bullish. Now you could have expected we could come back down to the VWAP, which is normally statistically the more likely thing that's going to happen, but it doesn't have to happen. VWAP doesn't have to get tagged, because being above VWAP means that there is more buying than selling, right? So the trajectory of the market has to change in the sense that more sellers need to come in to move us back down. Because as you can see, the VWAP is still tilted up, which means that they're still buying. Then, of course, on the Monday to Tuesday, we opened on settlement and we just digested. So here, no one got into a long butterfly because we were just too close to settlement. And as we started to push away from price, there was nothing telling us that we were going to come all the way back up. So we didn't enter a trade that day. Then on the next day, we gapped way up, we filled the gap, and then we digested inside that settlement price for a very long time. So here you could have stayed in the trade until 11:30, but if you would have stayed any longer, then you would have been giving back some of your gains. Later in the day, we did come back close, but not quite. You still would have been red on the trades if you would have held them. And then from the Tuesday to the Wednesday, this day, um, we actually had our long call butterfly inside the gap, because normally, as we always say, if you gap too much, then you're not going to fill it all the way up. So anyhow, all that to say, the trades did really well this week, and I hope that everybody was able to take profit and make their money. Here is a perfect example, excuse me, of a day where we opened very close to settlement. Our settlement butterflies were green right at open. Of course, the fast movement, they went red, but then we came back down and filled the gap. And so that was a perfect trajectory. Let's look at some of the other trades that we have closed. So I think the big thing, we closed a lot of our NVIDIA trades. Those were super deep in the money. Our long calls um, had basically become 80 delta trades. So there was really no more leverage in them. Even the short calls that we were adding were hardly giving us any productivity. So we just closed those up, and we have other NVIDIA and open new NVIDIA trades further up the mix. We did have an APLD short strangle. Those who I know that many people had already had closed this out or were moving the put up. So it did take a 60-cent loss if you just left it to expiration and didn't do any management. But we did add the multiple calendars above the trade so that those could give us more cushion, because we did see that there was a potential to get a squeeze into the 20, and our short call was at the 19. And we can actually look at APLD. APLD closed the week at 21.70. It did come down to 21.35, but it did not come all the way back down into our range. I do suspect that maybe next week we get a little bit more downward activity and then start to squeeze back up. But because of the fact that this was just chopping above our 20, we just let that expire, and we have allowed our other trades to continue to benefit from the time decay. We'll open that, and I just want to keep this open so we can look at our closed trades. We had the diagonal call on QBTS. The sad thing with option strat is when you close the trade, it doesn't really it doesn't show you what the trade actually looked like, which, yeah, it would be nice if it would, but you can see that our trade basically pinned. So we did really well. We also had multiple other trades. So in fact, the trade that we closed, because of the fact that we were above that short call, we didn't get our maximum performance. So let me just go back. So here you can see we got this like 1,300%, but in fact, we could have achieved a much higher return. So yes, the percentage return looks really massive, but you can see we only made $110 on the trade. Had we not rolled out the short call to the 23, had we rolled it out to the 24 or to the 25 and just had it as a calendar instead of a diagonal, we would have made a lot more money, because as you can see, the long call went all the way up to $5.50, and we opened the trade when the call was worth 44 cents, and the short call, we opened it when it was 52 cents, and it went up to a value of $4.50. Now, the thing that this trade doesn't demonstrate is that actually we've had the short call on multiple times. So that short call was already making us money. We already had that. We've actually been rolling that out multiple times, each time taking in a new credit. So the $110 return, or the 1,300% return, only reflects the return on the final position. It doesn't actually reflect all of the rollouts that we did that we're taking in another 30 cents, 20 cents, 30 cents along the way because we've actually been in this trade. It's showing you the last update, but we've actually been in this trade since for like 3 months now. So we've been in the trade for a while, and that's why we were able to hold this call. Because if you actually look at the chart, we were expecting a move to the 25 for October 17th. But if you would have been holding during all of this stuff, let's actually go to the daily chart, you weren't making any money. So anybody holding calls from May all the way until September weren't making any money. And in fact, depending on how you exactly positioned yourself, because you can see we're just trading exactly in a range. So if you would have been buying like on these possible breakouts, you would have been a failure 1, 2, 3, 4 times. And depending on how much time you gave yourself, you were just watching your money sit there and do nothing. It wasn't productive. Where for us, we were able to stay a very long time because we paid almost nothing for those calls. And then we ended up achieving a very nice return. So even though we didn't get the maximum possible return, which would have been like 5,000%, I'm still happy with my 1,400%. I'm not going to cry on anybody's shoulder. All right. I think that in the group we've had a number of new trades which are quite have a good chance to be quite productive. If I didn't think so, I wouldn't have set them up. But if you do have any questions on any trades that we're in or any trades that we've closed or why we've taken a certain type of position on a trade, please let me know because oftentimes I may choose to do a calendar, somebody may choose to do a diagonal, somebody else may choose to do a butterfly. But as long as you know what the directional thesis of the underlying is, you can choose different strategies to put more money into the trade so that you're getting a bigger return on your trade, or you can manage it so that you're paying less if you maybe are in a smaller account but still want to have some diversification. But the main thing is that you're participating in the trades and that you're participating in the returns as much as possible. All right, friends, I hope you guys had a very productive week. I know that my accounts are looking very positively green, in spite of the fact that the midday iron butterfly did give cause for a little bit of unnecessary stress on the Monday and the Friday. But I hope that by listening to the trade management, listening to the call outs, it helped you guys significantly mitigate your losses or even to come out green. The reality is that with systematic trades, you can only really be monitoring your win rate. And obviously, as of late, we've had the win rate has fluctuated a little bit, and we are just below the 90%, which, as those of you know, is not my favorite. I like to have baked into my plan that I am only going to take one loss a week so that I don't, or one loss every 2 weeks, so that I don't have to be too concerned about managing the trade. But of course, because on Friday, last Friday, not everybody got closed out for a profit. We did have to manage that trade. Monday, that was actually going to be a loss because we did not get tapped out of our $1, or most people didn't get tapped out of their scalps. But the 2 o'clock trade, the 1:30 trade worked perfectly. And then the rollout strategy also worked perfectly. And on Friday, adding that 1:30 iron butterfly actually returned almost double the return on the loss of the midday iron butterfly. So you do want to be cautious of the fact that not every trade is going to work every day. So you do want to be diversifying. Whether you're diversifying that by using a settlement butterfly or a 1:30 butterfly or doing some of the discretionary swing trades, that's up to you based on the size of your account. But overall, I would not recommend to anyone that you just do only one singular trade from the mix, because we are dealing with time-based patterns. And so we know that those time-based patterns are very consistent, that we can rely on their repeatability, but we can't guarantee that every single time-based pattern is going to show up every single day and that it's going to show up all the way until the end of the day. That doesn't make sense because if you just think about it logically, if the price is constantly at the settlement price, the midday price, and the 130 price, and then you do another settlement fly, it means that the price just stays at one price for months. That's not ever going to happen. So at some point, as price is making its overall trend to the upside or overall trend to the downside, you are going to have a settlement noon or 130 iron butterfly that doesn't capture the price action for that day. I think we had one settlement butterfly that we closed for a small loss, and then we had but all the other settlement butterflies returned very significant rewards. Then same with the midday, the days that it was working well. It did have a nice productivity, and the 130s have been almost all have been pins. So every day this week they've returned over 300, 400, $500, and on Friday almost $700. So you do want to be cognizant of the fact that there are shifts, in market dynamics. So not every trade is always going to be over 90% win rate. You do have to then diversify when you see that one trade is maybe not performing as much. However, because of the fact that we're looking at consistent occurrences, you don't want to get into the habit of saying, because yesterday this trade didn't win, I'm not going to participate. You have to just find another way of saying, okay, I'm going to participate every day in trade X or trade Y or trade Z. And on the days that that trade isn't necessarily productive, I will find a way to mitigate the loss or manage the trade by participating in another trade that then has a higher likelihood of being productive. Because on the days that the midday iron butterfly does not work, one of the reasons that we began using the 130 iron butterfly is because what we learned is that it consistently offers a very good scalp. If not, the price ends up being very close to the pin price and can offer you a very nice opportunity to mitigate any potential losses on your midday iron butterfly. And even if you won in the midday iron butterfly, you can still win on the 130 iron butterfly. And then you have now compounded two positive trades for the day. But because we're trading time-based trades, you have to be very cognizant of the fact that obviously not every day, every time-based trade is going to set up. And that's why we have 3 time-based trades so that you have multiple opportunities throughout the day to be able to participate in the price action without having to actively scalp with single long calls and long puts. Right, friends, I hope you have a great weekend and I hope this week was productive for you. Bye for now.